Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, checking in on SPY, IWM, and QQQ. So the bulls were out first thing this morning, and we did see profit taking driven by the tech sector pulling back. But we hit the second highest price we've ever seen in SPY. That definitely favors the bulls. And the Bollinger Bands are tightening. We're going to have to keep an eye on this upper Bollinger Band. We did close near the low of the day with the momentum favoring the bears as we head into tomorrow. But keeping everything in mind, the bulls are certainly in control overall as long as this middle Bollinger Band continues to hold. The low of our recent pullback was 240, 241. That's a new base of support and a new higher low on this uptrend. And we would have to lose the middle Bollinger Band to be at risk of losing that higher low pattern. So we'll see if the bulls test this middle Bollinger Band again tomorrow. We did test it to end last week and had a very successful test, so we will be watching that level again, and this middle Bollinger Band will be in the upper 242s as we do head into tomorrow. Weekly time frame for SPY, still favoring these bulls with the exponential moving averages holding. Really haven't even been at risk of losing this 4-period exponential moving average support over the last 5 weeks. So again, certainly still favors the bulls. IWM still forming a lower high, 141.58, 141.53. So we have our lower high pattern, and it's really a lower high, lower low pattern, so the bulls do need to be a bit cautious. Certainly buying the dip with a nice long lower wick after the back test and hold of the exponential moving averages. And if we would lose this middle Bollinger Band, that would be a concern. Same thing as SPY, but at this point, again, we're well above that level, and we're looking to see if those bulls can break 141.58. We are looking up at 142.31 and 142.90 right at that all-time high. So the bulls are still in control. A little bit more consolidation has gone on the past 2 weeks, but you look at the weekly time frame, long lower wicks all of the past 4 or 5 weeks. Definitely favoring the bulls buying the dip, holding those exponential supports, keeping the bulls in control, and keeping an eye on this potential bullish MACD cross that could happen at any time if we do head up towards that all-time high. QQQ, so there's that weakness due to the weight in the tech sector. And what we see here is a gap up open and profit taking for the majority of the day and a close down near the low of the day. So what we have is our all-time high, low of the pullback, and this looks like our lower high has now been set due to the amount of profit taking seen from here. And we've been watching for a break in this declining volume pattern, and it did occur, and it does favor the bears because it was mostly profit taking from that open, even though we did have that gap up. So I'm looking at support tomorrow of 140.15, and if we do see another red day tomorrow, that is going to indicate to me that our lower high has been set, and I'm going to be keeping an eye on this gap fill at 138.78 as a potential target, depending on volume. It depends on the volume we would see tomorrow if we do see a red day. But overall, the tech sector, in my opinion, is getting a little bit toppy. And I know it's been really strong all of 2017, but I am going to be watching in the next couple of weeks for the potential of the tech sector to turn things around in the short term. And that would obviously affect QQQ negatively. And if SPY keeps hitting all-time highs, that's not likely. So we would have to see SPY lose the daily middle Bollinger Band. QQQ, so there's our high, low of consolidation. Looks like our lower high is being set. And if we do pull back, we are at risk of seeing a bearish MACD cross and at risk of potentially losing these exponential moving average supports. So it is a big bear day. Well, not a big bear day, but clearly a bearish day. And it's really all about the follow through tomorrow. That's what I'm going to be watching. And if we see further downside and another solid red day, clearly favoring the bears, that will be notable going forward. And that will add to my theory that we might see a bearish start to the tech sector in Q3. Again, I'm not going to be acting on that at this point. Not seeing enough signals to act on that. Just seeing enough signals for me to be cautious bullish and to be keeping an eye out for further signals to be bearish. I appreciate you watching. We'll check back in tomorrow. Have a good late night.